You know, living north of Dallas, Texas means living in Collin County, which is north of Dallas and Dallas County. And this is where you'll find some of the most explosive growth in Texas and even the nation for well over 2 decades. Cities like Plano, Frisco, Allen, McKinney, Prosper, Salina, and so many more. And today, even though it's still growing, the housing market in the cities and the neighborhoods north of Dallas, Texas have really shifted into a lower gear. Inventory has exploded over 60% year on year, and for the first time in years, buyers finally have the real leverage. Price cuts, seller concessions, and longer days on market are becoming actually the new normal here in Collin County. And at the same time, new construction prices continue to increase ever so slightly, mostly in the lower ranges below $400,000 and not so slightly in the higher ranges, especially $600,000, $700,000, $800,000 and beyond. Now, all of this different activity, it kind of seems to be counterintuitive, can be even chaotic, but if you understand the shifts, there is real opportunity to buy smarter or sell more strategically in 2025. So in this video, I'm going to break down exactly what is happening, the hidden forces behind the North Dallas real estate market, why builders are quietly offering massive incentives still, how to have a buyer's edge on the seller and on the competition that you're going up against when you're a buyer, and which cities like Frisco, Plano, McKinney, or Allen, which ones are seeing the most price softening, and so much more. And if you are thinking about buying, stick around until the end, because I am going to give you an easy to implement buyer tactic which can significantly enhance your buying success and equity capture at purchase. So if you are, especially if you're relocating from out of the state, it's really important that you don't miss this information so you can plan your trip accordingly. So guys, if you want to move smartly in this new market, not based on outdated 2022 hype, this video will give you the clearest strategy for 2025. I'm Phil Martin, local expert advisor on everything residential real estate. Let's dive in. All right, we're going to start off by talking about the countywide statistics for residential real estate in Collin County, and it's going to be based on the averages, not the median. Let's check out the first one, days on market. We are up 34.2% year on year for the days it takes from the time you first go on the market with a new listing until it is actually under contract. If we go and look at homes for sale, you can see there's a 64.5% year-on-year increase in the number of homes that there are to buy. So they're taking longer to get under contract. There's many more to choose from. If we go to month supply, it's almost a 60% increase from year on year. And what is the significance of the months of supply? What this statistic will give us is how quickly homes will sell each month. How much can the market absorb? For example, if we no longer have any more listings going on the market today, it will take 4.4 months at the current sale rate for the homes to be all bought up. And here's a good rule of thumb. When you get into the 5 and 6 months of supply, the market becomes what they call it's neutral. Neither the buyer nor the seller has an advantage. If it goes above that, the buyer has a solid advantage. And so we are approaching the neutral territory at large across the county where neither the seller nor the buyer may have an advantage just in general. So with the month supply up, the housing supply up, the days on market is up, we're approaching that neutral territory. It certainly looks like there's a lot more houses out there to buy, more supply than there is demand. So everything's just taking longer. So why shouldn't prices be coming down? I mean, a lot. I mean, this is where we have to look at this, and it's a little counterintuitive, because if we go back and look at the average sale price, you can see it's only up by 0.3% year on year, and we're barely up maybe 4% for 2 years straight. So it's kind of flatlined the sales price. So why, if the supply has gone up significantly, why haven't prices come down? They've actually flatlined. So if we look at another statistic, which is the average sale to list ratio, which is how much did the person selling the home want and what percentage of that price did they actually get? If we take a look at this on our percent of original price in Collin County, you can see here that we have a 2.8 92% decrease in that ratio, which means buyers are getting a little more leverage. And on average, they're only paying 95.7% of what the seller wanted them to pay. Now, I want to quickly touch base on why it's good to look at the averages, but in a lot of cases, it's also really good to look at the median of the statistics. So what this means, look at the median, is so much different. It's 97.1, and it's only a reduction of 1.5%. So what this means is that half of the homes that sold at this time period, half of them paid more than 97.1%. A lot of them paid 100, 101, 102, 110% of what the seller wanted. But we're just looking at median. So median, half paid more, half paid less. So you can't go to the market just, I'm going to go in at 95%, right? You can't do that. You have to know a little more detail. But what we are seeing is a trend where on average, the buyer is paying less than what the seller wanted. So to finish off our look at the general mode of what residential real estate is doing here in Collin County, we're going to look here at what percentage of houses that are currently listed for sale have had a price reduction. And you can see that it's about 43.51 on our 90-day rolling average. So almost 50% of the houses that go on the market are experiencing a price reduction before they're bought. So all of this just says there should be a lot of advantage to the buyer at this point in time. Buyers have negotiation leverage again. It's amazing. You can actually ask for contingencies, for concessions, asking to purchase the house for less than what the seller wants. But here's a note of caution, guys. You have to pick your battles on where you will negotiate and where you won't. You know, for example, I see this all the time. I may have a buyer that we're working with, and they see a house. It's the biggest, baddest home on the market. The seller has put way more investment in the house than they should have. They're never going to get it back. But it is just a phenomenal home, right? It's not the average home. There's a bunch of average homes. There's a lot of homes that are below average, and there's those few that are the cherries on top. And I have to caution you, if you go in with average statistics thinking, well, I'm going to get this for 95% below list or 97% below list. Remember, the median price, half of those buyers paid more than 97%, and many of them probably paid well above 100%. So if you're going out to buy the biggest, baddest thing, and it's got all the bells and whistles, you are not going to be the only buyer who wants that house. So keep that in mind. There will be competition, and it may cause you to overpay for the house, potentially you'll pay above what the seller wanted, but it'll still be a good value. At any rate, you're not going to get something that's like a dollar-wise, a lowball deal that goes through. So pick your battles properly, and this is where working with somebody who really knows what they're doing and knows the local market becomes even more critical. But what we can say is overall in Collin County, we have right now the best buying conditions north of Dallas that we've seen since 2018, giving you time, leverage, and selection. So let's move into another general look at new construction. There's a lot of speculation these days on new construction, guys. You know, people are saying, well, I better buy now, or I better do this, or the tariffs and the policies at the federal level. You know, metal is going up, wood might be going up, et cetera, et cetera. And, you know, the experts that I'm listening to are also saying, hey, don't worry. If they put a lot of deregulation in, those things aren't even going to matter. You know, builders are still offering aggressive incentives of $10, $20, $30, $50,000 in buyer incentives, buying rates down on 2-1, 3-1 buy downs, or 30-year fixed buy downs below 5. And they can do it right there. They have many units that they're building, and they can offset the costs on one to the other, and they've planned and built into the price, right? All these incentives to still give them what they want. But it incentivizes a lot of buyers. They were about 9 or 10% of the market several years ago. Now they're above 30% of the market. I rarely have buyers build a home from the ground up because the builders are building so many, loading them up with all the bells and whistles, speculating, they're called spec homes, that somebody's going to buy them. And frankly, all their homes are getting bought right now. And so new home prices aren't crashing, but builders are quietly discounting through perks. And again, you have to pick your battles with the builder, knowing the history of that spec home, where it started in price, where it's at now, and what you may go in and offer. And always remember, guys, builders all build to code. Yes, they're all the same in that sense, but not all, if you don't build to code, you don't get a build. But not all builders build to code. They build 2, 3, 4, 5, 6 levels above code. And what happens though is you can get neighborhoods with very highly revered builders who are building these really high quality above code, adding more bells and whistles, if you will. They're a little more expensive, but in the same community, you might get a builder that's not as revered, not building to such high standards, but they get to charge the same high price because they're right next to the revered builder. And so buyers will go in and they won't realize that, and it may lead to a regret. And so all I'm saying is, if quality or the build standards, the service standards, the reputation after sale is not important to you, it's not a big deal. Buy the one that you like. But if it is, absolutely work with an expert who knows how to tease all that apart, because not all builders are the same, so don't go it alone. And guys, we work with a ton of buyers to buy new construction. If you've been holding out for new construction, now might be the time to pivot. You can find value in these new construction homes like you're not going to find in other places. Because if you think about it, we talked about earlier, there's so much supply. Why isn't the demand whittling it down? Well, in the next section, we're going to talk about that. It has to do with consumer confidence. And if you're waiting to buy that new construction with all those incentives, if consumer confidence does turn and more people go and the demand goes up, guess where the price is going to go up? Because prices have still been trickling up on new construction. And it'll probably continue to happen because North Dallas continues to have people moving in from out of state and from within the state, but the market is just a vibrant market because of the culture, the local policies here, and the number of jobs that there are in North Texas has really stabilized the market and kept us from experiencing the crash. We've had some adjustments, but nothing near a crash. And so the population growth of people moving in, that keeps the baseline demand strong, even when we're in a high interest rate or a low consumer confidence environment. Add to that in the area, we've just experienced in the last number of years, Texas property tax relief. The homestead exemptions have increased. How much they can raise your taxes each period we have a cap on that now, because we do have some pretty high property taxes in Texas in general. That's a whole nother video of all the different things that are coming to Collin County that are, when the consumer confidence and the economy does turn, oh my goodness, are we positioned to have it explode, including major employers like Toyota, JP Morgan, Chase, Liberty Mutual, PGA of America headquarters, Universal Studios has moved in. We have major healthcare, technology, manufacturing expanding just north of here in the next county, in Grayson County, not far away. It's been dubbed the semiconductor capital of North America. There is massive infrastructure right now as we're speaking, and has been for a couple of years, being built there to become the capital of semiconductor manufacturing and chip manufacturing in North America. So that is already underway. Remote work and hybrid shifts are keeping people in the suburbs, right? So you don't have to live, endure an hour and a half each way to work. You can work out in the suburbs and you can get to the affordability you need to. If you can afford the higher prices, you can live close in. But, buyers with solid jobs right now can be selective and not have to overpay. So if you're relocating or you're thinking about buying here in North Texas, you are buying into one of the strongest economic regions in the country, but that doesn't mean you have to overpay. It's not even necessary anymore, at least for the time being. Now, I've been talking about Collin County in general and the general statistics. We've been talking about the averages. We talked a little bit about median, but now let me dig in a little more. Approaching the market in a hyper-local fashion is where you will absolutely get the advantage. And until now, we've been, like I said, talking about the county-wide stats, and those should really serve you to inform you of what general trends are. And right now, the trends are pointing in the buyer's direction. Now, when buying and selling, you have to go down to the city level and even further to the zip code level, find the information, maybe the neighborhood level, the data, and the conversation that will really give you the edge as a buyer. So let me go and show you how we can do that. Check out this map. This map is showing you the home price growth year on year by county. And here we have Collin County up here. You can see we've had overall as a county a negative 1.5 or a 1.5% decrease in the value. We've gone from $527,605 in 2024 to $519,448 in 2025 in March. And you might say, gosh, that's not much of a decrease, and it's really not. But overall, you can see -1, -1.5, -0.8, -1.2. Dallas down here at a full 2% down. And the further we go north, it gets a little bit better. But watch what happens when we dive into, instead of the county, if you're thinking, oh, look, prices have gone down. That's my expectation for Collin County. In general, that's the truth. But what happens if we go to a 750, let's say 35, a Frisco zip code, and now let's look at this thing by zip code. You can see here that 75033 in Frisco is a 0.1% decrease. That's pretty much called nil. 75035, 0.1, that's called nil. 75034, 0.4. Down here, 0.1. And so guys, if you're expecting to have all these price decreases up in this corridor, so here's 75 coming up through Allen. And of course, over here is 35 going through Louisville right here. And right up the middle, we have, of course, the Dallas North Tollway, or the DNT, right up this direction here. We'll zoom in. There's the DNT. Here's Preston Road right here, and here's 121. But you can see Collin County, gosh, if Collin County was down over 2 points, where did all that 2 come from? It came from outside of this corridor, the Dallas North Tollway corridor. Out here, it's 2.2. Out here, it's 3.8, right? But if you're in the corridor, or if you're right up through what we call Plano, there's Plano, right up through here, Plano, Allen, Frisco, and McKinney, Prosper, and of course Salina. Salina only went to a 1.6 below year on year. And so it's not that bad. And actually, here's what I want to point out. Here's why: bide your time, right? The market, or our market in general, for the past couple of years with inflation and everything else, look at this. If we click on this particular zip code, you can see year-on-year growth in house value. It's -0.5, this right here, 2025. We go back a year, we had 4.7 above. 2.3 above, 40.4, 12.1. So if you go back 5 years, oh my goodness. So if you go back over 5 years, you've had probably 60, 70% growth in your house value. And this year, a -0.5 is nothing. So for each one of these zip codes, we can go in and tell you what the home growth value over 5 years has been. You want to know just what the home values are in general. There we have those price points, and you can see the average price here is almost $800,000 in this zip code in Collin County. You can look at average mortgage payments, property tax rate. We're able to pull out a lot of statistics, and we'll validate these on multiple databases. Days on market, right? And so days on market's 34. Look, it was at 13 at 2022, but look at this, 63. Out here in 2019, pre-COVID. COVID hit, bam, we hit 13. People started buying houses, actually. We hit COVID, it went up to 63. People figured out the interest rates had just plummeted. We got down to 13, which is crazy. Interest rates jumped way up, and then we're here. So we can look at these trends over time, and we can really give you insight into really what's going on, especially if you are looking at living here. We can talk about what percentage of the population works remotely, what the demographics are, the median age, the poverty rate, housing units, housing unit growth rate, rental rates. There's all kinds of data, right? And I'm not saying that we're going to just open up the fire hose and deluge you with data. That is not the point. The point is, if you can get down to this granular level with the expert, if you're working with an expert realtor and get down to this level of granularity, the conversation can be a lot more meaningful and consequential. So you're getting guidance with clarity. Well, why do you believe that? Well, because look at the trend. Why do you believe this? Well, look at it because of the trend. And so when you're getting into a contract, these things can become important in terms of how you're going to, what's the strategy you're going to use. And once you're in contract, you might think about, are we going to ask for other contingencies? What are we going to do during inspections? How much are we going to ask for in repairs? Do we think there's going to be an appraisal gap based on what we're buying? Seller paid closing costs. We can look that statistic up. And in general, what do we think, right? And again, if it's the biggest, baddest house, or if it's an average house, or if it's a below average house, will change everything based on not just the county, not just the city, but the zip code and maybe even the neighborhood. That's the kind of information that gives you an advantage in the game. And with an edge like that, gosh, you can pick your battles and win. And what a great thing. Makes it a lot more easier. It just makes house buying a whole lot less stressful and a whole lot more fun. And guys, remember, if the economy improves, if the interest rates improve, if the consumer confidence turns and improves and the buyers come back into the market, that advantage is maybe going to be a little slimmer, but it'll be there with this data. But there's going to be a lot more competition just throwing stuff out to see what happens. So you have negotiating power now, especially if you understand how to use it. If you negotiate blindly based on top-level trends, you may be left with regret and no home at all. So just be careful. A lot of people are saying, hey, the pricing is softening. And yes, the price increases were at a frenzy, especially coming into 2022. They went real flat for about 6 months, and then they kind of started boiling up again. And now, of course, we find ourselves where we're at. The rate of acceleration on the price has come down significantly, right? But the prices aren't crashing, guys. But the froth on all that activity is beginning to evaporate. As you can see here, median prices in the different zip codes here's Allen 75013 is 676 750, and over here in the heart of Frisco, it's 899 750. Half the homes sold for higher, half the homes sold for less. And let's go ahead and look at the price change year on year. So we have some pretty minimal price changes, right? And going back to the median list price, if we pan out a little bit, you can see that if you're along the Dallas North Tollway corridor, it's right here. We'll zoom in. You see D&T right here, and it's this orange line coming down through Frisco, right through Plano. Look at that corridor. It is hot. 685, 757, 899, 863. Other areas like Allen, 676, hot, not as hot, but still the right color, right? And so you have these 585 even on the east side of Allen, coming up into Salina, 587. So this corridor, the closer you are in to the Dallas North corridor, the more expensive the houses are going to be. If you go out to the outer edges or further out to the north, you're going to have more affordable homes. Up here in Anna at 393, as a matter of fact, and this is still Collin County. And of course, all in here, we can come over here at 334. There's some up here, 373. I've seen new construction actually below 300, but it's pretty far out there. But the Dallas North Tollway, my point here, is the exception in terms of it's always going to be the higher price, and usually so far it's always had the most appreciation because that's where all the exciting things are happening and going on. As I talked about before, if we look back here to Collin County and we look at the properties with price decreases, right now there's 43.51% of the houses on the market have experienced or have had a reduction in price trying to get that thing sold. And don't forget, the builders, if you know how to negotiate and who to negotiate with when it comes to the builders and their spec homes, we've done some things in the past 12 months. For example, we've seen upwards to $60,000 in price reduction. I have seen actually upwards to almost $100,000 in price reduction. But the smaller the house, the less there's room for those kinds of reductions. If you're buying a home at the $700,000, $800,000, $1 million level, there's more room to budge in there and to negotiate. I call it a twist in the arm, right? Do that with the kids, just twist the arm. We call them an Indian burn. If I know you're serious about the house and it's new construction, I know all the ins and outs of that. I've built almost 100 homes myself in the past 5 years. So I know how it works. I know where the negotiation can be had and where it can't, and where you might want to go and where you might not want to go. All of that really does matter. And when we are looking at all this data, and you can actually create the trend lines, which will not only let you give you that backward looking snapshot, but it lets you project into the future as to where things are going. And you're looking forward with the comps, and you can avoid overpaying in areas where the appreciation is just not going to be there, or you get better deals when you know kind of what the saturation in a certain, or the absorption rate in a certain market is. There's many different things that become your advantage when you may not be looking at all this, but the person you're working with is, give you rational reasons to give you the thought process that will give you the clarity you need to make the important decisions as the decision maker when you're buying a house that's $600, $800, $1 million, right? This may be your last home. You can't afford to make a mistake. If you're coming down, you're downsizing and you're buying that last home. It's got to be a good one. You don't want to buy the one that you're going to regret or have a lot of costly repairs or mistakes with it. So let's go back to the big map.
And this map is a little confusing. I just need you to know that we can look at these statistics, and what this is, it kind of looks like a weather chart with these little arrows pointing different directions, kind of like how the wind charts look like when you're looking at your weather on your iPhone. But actually what this is an algorithm. It's a proprietary algorithm which does price forecasting for residential homes. And it'll tell you, it predicts whether in the next 12 months, housing prices might be going a little lower, might be going sideways or neutral, or maybe going up. And really, when you dip down below 30 is when, that's the radar of, well, in the next year, it may get a little softer. But if it's above 30, that means it may wobble a little, but it's fairly firm, you might say. And if you get up into the 50s where the arrow's going sideways, you can see up here on this forecast, it's forecast to appreciate fairly well. And they project days on market going forward. But most of the map right now is in purple because the rest of this year, we've got a lot of chaos going on with our policy, with our realigning our whole economics of our country. And so the consumer confidence, I believe, not the prices, it's the consumer confidence and the affordability number. The prices, yes, but it's really about employment and confidence and employment or getting a job. Doesn't mean that it's going to crash, as we saw. This whole area has experienced a 1 to maybe 2.5% reduction year on year. And after that, for the past 5 years, we've had 60, 70, 80%, or even more in some areas. So just remember, dig down, be hyper-local. So what do things look like by city? Well, in Frisco, you can see on the west side of Frisco, our housing prices are significantly lower than they are in the central corridor. When we go east, they're still pretty high. If we get to Allen, the west side is significantly by $200,000 worth, more higher on average than the east side. But if you go far east, it's $1 million all out in a little place called Lucas and Parker out in here. Down in Plano, we can get average prices that are ranging, guys, from $386 right here in the old town, in the parts of Plano which are older but gentrifying. I went to a home this morning in Plano. I want to show you something, because in these zip codes we have a lot of older homes and they're gentrifying. What that gentrifying is when somebody comes in and takes the old home that's 50, 60 years old, literally, and they'll scrape it off, build a new one, and or they'll scrape it out and just redo the inside and make it look nice and pretty. This zip code, you're probably at about 50, 40% gentrification. Over 75075, you might be upwards to 70, 80% gentrification. But what that means is, on the same block, you may get a home. These are comparable homes, same size, same year built, all that stuff, but one may be selling at $375, the other is selling at $515, and actually they will meet appraisal. So look at the range on those is crazy. And here's an example of what we were looking at today. This is comparable homes, plus or minus 20% of square footage off of 2,200, and you can see from 1,800 out here to 2,600 square feet, we have price differentials of around $398, and this one up here was actually $475. And so vast majority of these homes have been fully renovated, and even being fully renovated, you can see some big price swings. It's all based on, how fast the investor wants to sell that home that did it. And so when you're down at this hyper-local level, you're going to see some what look like really weird discrepancies when it comes to pricing. But this particular area, it's absolutely all about location, because when you're right here in Plano, great mature trees and neighborhoods, and if the house has been renovated, it's quite nice. But when you come over here to the west side of Plano, we're up 752, 660. It gets pretty pricey again. Coming up in McKinney, everywhere from 446 on the east of 75, 471 out here, but 506, and we run up into the 524. And this can be deceptive too, because as these two zip codes get very close to this one, the houses right in this corridor along Custer can be pretty darn expensive, right? And so Here especially, you need to know the neighborhood because there's some stuff right up in here that's nowhere near 524, and it's really pretty sweet. I mean, when you look at these neighborhoods and how they are put together. Up here in Salina, 606, and of course Prosper, 796. It's pretty pricey to live in Prosper. It's tough to be a first-time home buyer here, tough to be a first-time homeowner near the corridor or this one in McKinney. But other than that, these are medium prices, guys, so half lower, half higher. All the way out on the west side, 428 in Frisco. Half are lower, half are higher than this price. So it's possible. But in general, you can see that the year-on-year growth on these houses, it's been pretty stable, even through rocky, chaotic times.
Now, if I haven't given you enough information, now please keep in mind that my overarching point to this whole video, guys, is yes, it's beginning to be better for buyers, right? And yes, there's a ton of moving parts. And yes, you need to have access to this knowledge, not just access to it, but the interpretation of it and what it means to you. What would the impact be to you? And hopefully what this is doing is, by knowing that there's so many moving parts and you're the decision maker, it becomes very important the questions that you're asking, right? And I'm going to put one more layer of difficulty or one more layer for you to consider in this. So if you're looking at the county at large, that's a trend, right? If you're looking at the zip code at large, here's the thing. When you get down to really looking at the specific house you're interested in, the zip code statistics become a trend. What you have to do is now segment by price point. And what we do is we segment the market into 4 pieces. The bottom 25%, then 25 to 50%, and then 50 to 75% higher prices, and then the top 25 or 75% to 100%, the top 25% of the price range that you're in the area that you're looking for, because homes that are down here at 300,000 and 400,000, those are different animals than the ones that could be in the same zip code that are at $1 million plus. Different animals eat different things, they play differently, they walk differently, everything about them is different. And so if you're going in and you're going to have the edge based on information and data and look and understanding the market, you have to be using the information that comes from the price range that you will be operating in. Let me give you a quick look. So here's just the median list price broken out in Collin County, right? Just in Collin County. But you can see right here, the bottom of that is the lower 25%. The median price is $345. The upper is $958, $394. So in that upper 25%, half of them are lower than $958 and half of them are higher than $958. And so if we want to dive right down into, let's say, a zip code, let's go into Allen. Look at what happened. We had this, our needle just moved way up. From near 30, we moved up to 45. And so this is a strong seller's market. And now we come down to the median price here, right? There is the median price. It's at $1 million is our top 90. And so we can now come down through the different statistics, average days on market. Notice the average days on market for our $1 million plus homes is much higher. It's at 77, where it says upper 90, right? And so if we just focus on upper 90, because that's where we're buying, we can now go through our statistics, the median days on market. So you're coming across a home that's biggest and baddest. You love it. It's in the higher tier. It's been on the market for 4 days, and you're going to go in and lowball them. Probably not good, since the median is 50 days. They're going to go, hey, we just got on the market. This usually takes about almost 2 months. No. But if they've been on the market for 75 days, well, different story. At least in this zip code, in this price range. If you were looking at the upper 90, not the top 90, right? Now it's 50 days. But if you're buying at the bottom 90, well, it's 33 days. And so you can work your strategy accordingly. Properties with price decreases. Here we're at the top and the bottom, just the top and the bottom. And the upper up here, 50% of the houses are getting a price decrease. So it might be worth to dig in. How many days have they been on the market? How many price decreases have they come through? If they've already come through 3 price decreases and they're at day 75, they may not feel like another price decrease. But if they're on day 60 and there have been no price decrease, maybe they're going to be open for it now. My point is, you can get really granular, and you should. Working with the right expert to really give yourself the advantage that is here if the person you're working with can just get this information and help you interpret it for what you need. So I've said it before, it's just going to help you not only pick your battles, but win the battle you pick. And that's what it's all about when you're buying a home. And if you're relocating from out of state or you're coming here and you've only got a short number of days to operate, it becomes even more critical to have this information under your belt and understand really what's going on. So overall, what does this mean about the market? And the whole point of this video, well, here it is. If you're a buyer, it's a great time to buy. If you are a seller, you better be prepared and know how you're going to negotiate and position that home properly, because you know what's going to be being asked of you, the things that may be coming at you and why. And if you hold out too long, you may not be picked and you may be on the market a whole long time. And if you're an investor, it could be an excellent time to buy another home. Or if you just want a second home in this area because you got grandkids or family here, what a great time to do that. So because if consumer confidence does recover, if the interest rates do recover, it's just going to increase demand. We already have the supply that has been outstripped. And so more competition, higher prices if it becomes more attractive to buy. So now if you can, and maybe you're being relocated here by a corporation, it's just a great time to buy now. So now the pro tip that I promised at the very beginning on how a tactic to significantly enhance your buying success and your equity capture when you purchase. A lot of people will look at houses throughout the week, but they'll go out and tour houses on Friday, Saturday, and Sunday. Most offers by far are submitted over a weekend. And so if you wake up Monday morning and you look at the properties you were interested in, a lot of them may say under contract, under contract, under contract. But a couple of them may say active. They're not under contract. They're not under contract. And so if you come in on a Thursday and you're submitting an offer on Friday, if I'm a seller, I'm going to say thank you very much, but I'm going to wait until Sunday night or Monday morning to see what I have. Because now that you gave me your offer on Friday, I'm going to call everybody that possibly had an interest in this house, and I'm going to say, I have an offer. Would you like to have a chance to get the house that you like? And they can foment a little bit of competition on you, right? But if you look at these and you're patient and you're picking the battles, now if you want to pick the biggest battles with all the bells and whistles, this is not a good strategy for you. But if you're picking the average home, or maybe you don't mind maybe below average because you're a DIY person, but the average home here is pretty stunning, frankly. And so if it's already been on the market, let's say days on market are 20 and your zip code are 24, in that upper price range, it might even be 30, and all of a sudden you're tipping 35 days over the weekend. Well, if you're here just to look over the weekend, and on Monday, you call and the houses that you're interested in and say, hey, do you have any offers? If they have offers, okay, you make your decision at that point. Do I want to join in? But if they say no, think about this. The seller who's been used to over the past couple of years putting their house on the market and selling it in a week, getting max price, taking their pick of the litter, so to speak. Now they're kind of getting beat down. Very few people have come to their house because there's just, not because it's not a nice house, but the buyer pool is kind of shrunk right now for all the circumstances we've talked about. And they're going, well, yeah, another weekend just passed, another open house, and we don't have an offer. And all of a sudden you kind of amble in on Monday afternoon and say, yeah, you have an offer? No. Okay. So by Tuesday, so you can begin the negotiations. And by Tuesday, you submit the offer. Wednesday at the very latest. But the key here is, look, we're from out of town. We just gave you an offer. We need to have an answer by Wednesday. We need to have an answer by Tuesday. In other words, you give them a deadline. And now they are in the box. This is the box where we start to turn the heat up, right? So if you're picking your battles, just one little tip. I've worked this for many, many years, and it works wonders, especially to the seller who's been there a while and they're twiddling their thumbs and their skin's crawling because they haven't sold their house yet. Another weekend, but oh, by the way, I'm interested. Here's my terms. You have 24 hours. Tick tock, tick tock. And that is a pro tip anybody can implement. It's maybe a little tougher to get off work. Maybe take a Monday, Tuesday off, a Friday, Monday, Tuesday if you can, versus the Thursday, Friday, Saturday, Sunday when everybody's out there looking. And you say, hey, what if I don't get the one I want? Well, when you call Monday and they have an offer, or Sunday night, well, put your offer in. If they don't have an offer, and there's plenty to choose from right now because inventory is way up, well, it could work out for you. You know, guys, the truth is, navigating the North Dallas market in 2025 isn't just about looking at listings or price charts. It's not. We've looked at a lot of that today. But what it's really about is understanding where the real opportunities are and what moves will actually set you up for success in the long term. Now, if you're watching this video, you've probably bought a house or two or three. It's not your first rodeo, but buying a house is stressful, but moving out of state to a different area, that's even more stressful. And an area that you may or may not be intimately aware of or know about. So at this point, you might be feeling a little overwhelmed by all the moving parts, or worried about overpaying, or just unsure where you even have leverage right now. And if that's the case, you're definitely not alone, because this market looks a lot different than it did just a couple of years ago. And trying to figure out all of these moving parts on your own, it can be confusing and overwhelming. But here is also the truth. You don't need to know how to do all this. You need a who, not a how, but a who. Someone who is an expert and knows how to get you to the bottom line in an easy to understand way. That doesn't leave you with regrets or anxiety because you're waiting for the other shoe to drop, or getting a surprise you weren't expecting after you move in. And that's why having someone who truly knows how each city, Frisco, Plano, McKinney, Allen, Prosper, and the rest of them, how everything you need to know about those cities, and they can dig deep and give you the guidance which results in the clarity you need. So you don't have to be in the react mode to these shifts, or when you're in the breach, in the battle, so to speak. You can be calm, cool, and collected, and be more in the response mode. And it'll save you a whole lot of time and money and second guessing. And whether you're buying or selling with all these moving parts, strategy matters more now than ever. So guys, if you are planning a move here to the city or a neighborhood north of Dallas, Texas, and you want clear, personalized guidance that will lead you to the clarity you need to make the important decisions, I can help you. Just like I've helped many others for well over a decade. You can email, you can text, or simply call the number on the screen. We'll schedule a conversation. The conversation, I like them over Zoom so you can see the numbers and the pictures and the houses and all the things we're talking about. But this conversation is going to be 45 minutes to an hour or more long. No cost, no obligation. We're going to talk about not just bedrooms and bathrooms, but we're going to talk about the things that matter to you. No obligation. I'm not going to make you sign an agreement before I will cough up all of my golden nuggets. That's just not the way I work. I'm going to show you what it's like to do business with me, so we can see what it would be like doing business together. Doesn't that make sense? You wouldn't go to a doctor and say, tell me what the issue is, and you'll say, no, sign here and promise to pay, and then I'll operate. And remember, you don't have to know how all this works under the hood, but you do have to have a who. And I would love to be your who and help you find and purchase the home that is ideal for you. And if you're still deciding which North Dallas suburb might be the best fit for you, check out our city-specific YouTube tours. Those will be helpful. Or subscribe down below to make sure you check out the next video where we'll review places that you might want to avoid in the area. This is Phil Martin. We'll talk soon.